Yeah, I mean, I think that, ARC focuses broadly on innovation. And we find that, if you're looking backwards, it's very tough to predict sort of these exponential growth stories that we see. And I think that Tesla is just the perfect example of that. So again, I mean, we think that the expected value is $2,000 per share over the next 5 years. So this is just, it's been an amazing story, and we think it will continue to be an amazing story because of that unparalleled data advantage. Of course, they have a charging advantage. Also, they recently announced that they plan to have 100 exaflops of training capacity by the end of 2024. That's up from 4.6 that they announced last year at AI Day. So they're also going to have access to training that they can use for full self-driving, for their other AI projects that really very few companies have even access to, and they're actually building it in-house.
The advantage that Tesla has in software and in data is unparalleled compared to peers. This is what Ark Invest Director of Investment Analyst and Institutional Strategies Tasha Keeney said in her recent CNBC Last Call episode. It is no secret that Ark is a huge Tesla bull, and that its CEO Cathie Wood is one of the biggest Tesla bulls of all. In fact, Ark's updated open-source Tesla model yields an expected value per share of $2,000 in 2027. The bull and bear cases tuned to the 75th and 25th percentile Monte Carlo outcomes, respectively, are approximately $2,500 and $1,400 per share. In the bearish scenario, Ark modeled a 25% probability that Tesla could be worth $1,400 per share or less in 2027. Meanwhile, in a bullish scenario, there is a 25% probability that Tesla could be worth $2,500 per share or more in 2027. According to the open-source model, Tesla's prospective robotaxi business line is a key driver, contributing 67% of expected enterprise value and 64% of expected EBITDA in 2027. Across Ark's simulation set, electric vehicles account for 47% of revenues in 2027, at substantially lower margins than robotaxi revenue. Even without the robotaxi fleet, Tesla is already way ahead of the competition. For one, Tesla has been developing its full self-driving software since 2016. Recent progress shows that Tesla's self-driving software is far superior to its competitor Waymo. Every Tesla is equipped with all the hardware necessary for full self-driving, and a customer only needs to buy the full self-driving software package to enable it. Those who own a Tesla Model 3 and regularly use the self-driving feature in their daily commute said that no other car company currently ships a full self-driving software similar to Tesla. Even after 10 years of development, Waymo does not have a customer product. Even Cruise self-driving software is also years behind, and it does not work everywhere but only works on the highway systems and those roads that are pre-mapped by Cruise. On the other hand, Tesla's self-driving software works on any road in this world. Another advantage Tesla has over other EV makers is the fact that the company designs and makes its electronics, including artificial intelligence processors. Other car manufacturers mostly outsource it from another company instead of developing their electronics. This is a bottleneck for a traditional car manufacturer, as this approach stifles innovation. This is why Tesla's AI chip is far superior, faster, and consumes less energy than its competitor NVIDIA's chip. Moreover, NVIDIA only sells chips as they don't have any software. Tesla also has strong revenue growth. In fact, despite a rough year last year, the company reported Q4 2022 revenue growth of 37%, with automotive sales, which make up 83% of its total sales, rising by 35%. Comparing this revenue growth to other automakers, it's clear that Tesla still holds an advantage. Furthermore, while other automakers' revenue growth rises and falls from quarter to quarter, Tesla's growth has constantly remained ahead of everyone else. With management guiding for the production of around 1.8 million cars this year, it will continue to grow sales rapidly if it can sell its product. Tesla's network of superchargers is also another reason for the company's success that sets them apart from other EV makers. Those who own EVs that are not Tesla know how tough it is to make a long road trip with that vehicle. It is because only Tesla has an extended supercharger network throughout the world. Although there are other alternatives like Electrify America, that network does not give a similar experience to the Tesla supercharger network. In fact, there have been numerous instances where Electrify America did not work and had a bad user experience. Meanwhile, if you own a Tesla, not only can you use the supercharger network, but also use Electrify America and other charging networks. However, if you buy an electric vehicle from another company, you have to rely on those third-party networks, but not Tesla's supercharger network. Obviously, this supercharging infrastructure is a moat for Tesla. In fact, it is already proving to be an edge for Tesla as other legacy automakers have partnered up with them for access to the supercharger network. That's not all. Although many are not aware, Tesla is not just a car business. In light of this, the energy facet of the business is also very helpful in the growth of the company. Now that Tesla is the undisputed king of the electric vehicle game with more than 50% of the market share for EVs in the United States, what do experts think Tesla should do to stay on top? One is offering more affordable EVs that can compete with other automakers' offerings. Currently, Tesla's Model S and Model X vehicles are some of the most expensive EVs on the market, which limits their customer base. By launching a more affordable EV, Tesla can appeal to a wider range of customers and stay competitive in the market. Tesla already has the technology to produce a more affordable EV, so all they need to do is make it happen. Tesla can also expand their production capacity, although we all know that they are working very hard on that. But as of now, Tesla's production capacity is limited, which makes it difficult for them to keep up with demand. By expanding its production capacity, Tesla can produce more vehicles and meet the growing demand for EVs. This will not only help Tesla stay ahead of the competition, but also help to reduce their production costs, making their vehicles more affordable for consumers. Despite all the room for improvements for Tesla, it remains true that Tesla is currently the market leader in the EV space. In fact, in an attempt to catch Tesla, who has been recognized as the industry leader, car companies have tried all strategies, including undercutting pricing, and they are still barely caught up. Tesla's most affordable vehicle is the rear-wheel drive Model 3, which starts at $42,990 before incentives. It is far from the most affordable EV on the market, as several vehicles both in production and planned for the future have been marketed as the Tesla killers, a term that was widely put to rest a few years ago. Why? Well, simply because there is no Tesla killer, because those vehicles wouldn't even exist if Tesla wasn't around. They're purely thoughts and eventual products of any automotive company because of Tesla's mass influence on the automotive market. The angle that these car companies have come up with is, if it's cheaper than a Tesla, then people will buy it. Did that work? Obviously, not as well as they expected. For instance, the 2023 Nissan Versa, which is priced at $15,730, isn't the most popular car in the world. This only means that consumers want more than a low price tag. Customers take a lot of things into consideration. Looks, features, technology, range, performance, and quality are just a few metrics that car buyers take into account when buying a new car. Tesla still maintains a sizable lead in terms of sales by model in the EV sector today. The Model Y sold 251,974 times last year in the US, according to Kelley Blue Book data. The Model 3 was sold 211,618 times, while the Model S recorded 32,675 sales and the Model X had 26,121. Even the Model X managed to outsell things like the Kia Niro, the Hyundai Ioniq, and the Volkswagen ID.4, despite being Tesla's most expensive car and least popular model. Why, you may ask? Simply put, there are many factors to EV ownership. The charging network might be the biggest influence, and Tesla dominates in that realm. It also holds a considerable advantage in technology, range, and performance. Tesla's advantages lie in places that are far past affordability. As mentioned earlier, it goes past price and goes much deeper into what the company offers in terms of a variety of other metrics that make a car truly enjoyable to own. Companies have long struggled with adequate charging, software, and other things that are hard to solve. It's not an overnight fix, and Tesla may have much more experience in terms of having a car operate more like a phone than a vehicle. It will take time, and it will come around to these car companies on how to solve these issues. But make no mistake, Tesla won't be dethroned by cheaper options alone. Only if these cheaper options also offer superior software and adequate charging infrastructure along with many other things, will Tesla be beaten. But then again, as Ark CFA Tasha Keeney said, Tesla has an unparalleled advantage in software and data. This is the cold, hard, and undeniable fact today. As other EV makers are scrambling to improve their software and data, Tesla is already miles away and will probably continue to be ahead as the company's R&D never stops. Subscribe for more.